let's continue. I said there is a gap in the literature in integrating these preferences into investment portfolios while still looking for competitive returns. So actually, investors are becoming more picky and about their preferences, creating a problem for advisors, for human financial advisors who must balance profit maximization and returns with these increasingly granular and specific individual needs. Um, so while robo-advisors are cost-effective and very efficiently real-time available, it mainly lacks the emotional and human touch and offer a black box asset process, leading to a loss of trust and connection. So this key limitation also there is a growing need for better customer profiling and more engaging conversations. On the other hand, we also have uh, needs to access real-time data, financial data, refined, highly quality data, and also need to interact smartly with our environment, with our stored data that we collected and aggregated. Maybe some other tools, financial calculators that each financial advisor need in their workflow. And dealing with this big amount and velocity of data can be also big concerns due to the dynamism of the market, the financial market data. Also, we have LLMs with their mathematical operations lacking their the ability to do complex mathematical operations. While they present astonishing software advancements, they still fail in critical areas such as data extraction and many other intricate calculations, as you know. So also taking autonomous actions. So this leads us to design our end-to-end solution, and that can take care about the big data and velocity and the autonomous workflow with agentic system. So we started by scraping the data, sending it into Kafka, and from Kafka we are going to talk how we can manage to create a real-time data processing to store it finally in our data lake storage. So we are going to talk about a use case. How can we guide and help the user to engage him in the process of hand-picking, let's say, the assets and ensure we are on maximizing profit and also taking into account their preferences. So first, we store raw stock prices and other assets also scrape it from websites, including all the anomalies and incomplete data. But after that, we are going to ensure that only the assets that have historical data that we can compute their metrics of interest and remove all other assets that do not have complete historical data. We also worked on 5 types of assets, which are stocks, commodities, ETFs, mutual funds, and bonds. This pipelines is continuously triggered, scraping from multiple data sources. And if the asset doesn't have at least 3 years historical data, we remove it from our database. Finally, we aggregate all this data into averages and technical indicators that we can categorize into 3 types. long-term indicator performance, short-term, and mid-term. So basically, the user interface starts from this page in our demo. So the investor should fill in the form and enter his age, the education, occupation, number of kids, some basic information that we can send to our machine learning model estimator trained on a survey of data having these same variables. And with that, we can have his risk aversion, which is a coefficient that can estimate how much the investor is able to take risk in his investment. Second, we give his risk aversion estimation, and we start the customer profiling phase, which is basically a crucial step in every financial advisor workflow. And we start encouraging him to define the smart financial goals of investment. So he can be, we have to ensure that the goal is smart, which means specific, measurable, achievable, relevant, and time-bounded. There is a lot of investors that start using their financial robo-advisor without ensuring that their goal are smart enough. So they don't meet that goal, and maybe they're not satisfied with the results. So for example, if the user enter, I want to invest $10,000 to reach a goal of etc. in 5 years with a monthly investment, can this goal be achieved? Here, the customer profile agent can extract the target, which is $10,000, and the goal, the goal of $1 billion, and the initial investment, which is $10,000, and the monthly contribution, which is $500, and the time frame, which is 5 years. And for example, here, he's going to use a financial calculator that will calculate from his data the future value of investment, taking into account the annuity and the time value for, as you know, the time value of the value of the price today. It's not the same in 5 years and in 1 year. So here it's not achievable, and he is encouraging him to adjust maybe the horizon or the monthly contributions. So after that, after ensuring the goal is smart, he asked him to give his preferences and ensure all the preferences are clear. Then he is prompted to confirm or to reject. And finally, he gave him the assets he selected from our data we collected with our data pipeline, and give him an asset distribution per industry. So let's dive deeper into the pipeline we designed. So first of all, the user query is entered to a router, and here we mixed this software with the NLP. So we are doing some programmatically if-else from the data we extracted, from the values we extracted. We pass first of all to the smart checker, which is responsible, which is a agent. We will going to dive deeper later to see how it can tackle this, manage to define if the goal is smart or not. Then we go to the preferences, and we designed a prompt that is responsible for a fallback handler. So for example, when he asks something that is not aligned with the goal of this application, he's going to prompt it back to discuss in the subject. So here's how we designed our agent for checking if the goal is smart or not. So first of all, we validate the SMT, this specific, measurable, time-bounded. if there is a clear defined goal, for example, buying a house, then we check if it's measurable. Then we measurable means having initial contributions, monthly contributions, and a time frame. If it's okay, we pass to validate the achievability, else we go to not smart. Um, for the validate achievability, it's going to use the tool calling, which is a financial calculator, sorry, that use this formula basically. So if the future value is greater than the expected target, we can say that this goal is smart. Else we say that it's not smart, and he need to adjust some uh, of the initial uh, data he gave us. So, for example, the time frame or initial investment, etc. And finally, we prepare the final response generated. From the user preferences, the LLM decide whether they are valid preferences or not. For example, the user can enter anything, but it must be specific to assets. For example, I want to invest in assets that do not exploit children, related to companies that do not exploit children, that do not pollute environment, or some things like that, or having ESG higher than 5 or something like that. And finally, if it's valid preferences, we send them to the asset selector. And this is the asset selector. Basically, the manager decide if it routes the percentage of the number of stocks based on the risk profile and the risk aversion estimation and the preferences. All this data combined, the manager decide, for example, if he wants to invest in companies that do not exploit children, we cannot use ETF and mutual funds because they are a blend of multiple piece of assets that we don't have um, maybe we don't have full access and the exhaustive list of all the companies involved in these mixed of assets. So we set the percentage of ETFs and mutual funds to 0, letting only commodities, bonds, and stocks. So for example, let's be in this part, the stock manager. Let's say the manager decide to allocate 0.3 of the whole budget to stock. The stock calculate how much number of assets, for example, let's say 5 stocks, and basically from the human preferences, he decide whether these preferences can be checked via our stock searcher or via our stock CSV manager. And how to decide, for example, if I say I want to invest in healthcare companies and in companies that do not exploit children or our nature badly. The stock manager have in the prompt the schema of the CSV files stored in our data lake. So if the schema have this information, he can only check for this information in the CSV manager, and else it's directly routed to the stock searcher and do the research. If there is no information available, we eliminate the stock and move to the next. And this is repeated until we have the five as stocks we wanted. And then the final stocks names are sent to the stock decider. And this is done simultaneously with all the stock asset types. Finally, we do some portfolio optimization management. So for the Black Litterman model, if the investor has included his preferences and his estimation of a maybe prioritizing some assets than others, we can include his information in this model, because Black Litterman include subjective investor estimation or prediction on the stock market in the optimization process. And then we compute the best performing, let's say, model for optimizing the portfolios so that we can pick it for the final results. Thank you for your attention.